0.8%. HCL Tech also up 0.9%, and this is after a strong performance in the last hour of Wednesday. Shashi Bhusan joins us. Thank you so much for joining us, Mr. Bhusan. Infosys, what do you expect from it?
So we are expecting a US dollar term growth of 3.1% for the company. At the top line, we expect margin expansion of around 30 basis points because most of the cost has been accounted for in the previous quarter in terms of wage hike. We have promotions, but non-accrual of visa cost and then rupee depreciation will definitely lead to some margin expansion, and that's why we are expecting around 30 basis point improvement. And at the bottom line, we are expecting an EPS of 51.6. There could be some surprise at the bottom line because Infosys generally takes hit and gain because of the forex fluctuation entirely on their P&L, and they don't pass it on to balance sheet. In terms of guidance, we don't expect them to revise the guidance in this quarter. It will be stayed at 7 to 9%. Looking at cross-currency movement, I would say that number also looks good because cross-currency has been unfavorable in this quarter. Also, this will be a first quarter of Dr. Sikka as the CEO. So there will be some strategic guideline and the new initiative taken by Dr. Sikka discussed in this conference call. So these are our expectations from Infosys in this on 10th.
So what are you picking up in terms of the strategic bent of mind of Vishal Sikka? You know, the way one looks at Tech Mahindra is very clear. They want to grow rather than focus on short-term margins. What do you see as the strategic, orientation of Mr. Sikka?
Right, it's very difficult to preempt because he's new to Infosys. We don't know his style of working and thinking, but I think there is not going to be any tectonic shift in.
I mean, he seems to be not afraid of giving big raises. He doesn't seem to be afraid of, taking a slightly higher wage cost. Infosys has been one of those companies which has been very strict in terms of HR practices. And we've heard anecdotal stories of people being reprimanded for not wearing ties. Wages itself have, pay scales have not been entirely at par with the market because of the branding it had. But Mr. Sikka seems to be changing all that.
I think there is a little bit of confusion over there. Those tie and all those rules were taken off some time back. That I think, if I'm not wrong, almost 9 months back, that those rules have been eased off a bit. Depending on, if the client is visiting your office, obviously you have to wear. And in terms of wage, I don't think, if I look at the guys at the same level working in different companies, I don't see a significant difference in the salary level of, employees in Infosys and Wipro and TCS, these top three names. In fact, in some of the instances, Infosys might be a touch higher than its peers.
So that's what I'm saying. I mean, if one compares to the past, Infosys, because of its branding, which an ex-colleague of ours used to call a mother-in-law company, the company where you went to your mother-in-law and said that the daughter said, oh, my boyfriend works in Infosys, the mother-in-law was happy and said, okay, you can marry him. And therefore, you paid a little less to your employees. But now that seems to be out of the picture, right?
But they used to pay, they used to pay a salary not below the industry standard. I think there is, that's what I'm telling you, there is a little bit of confusion over there.
Okay.
Even now, some of the guys that I interact with at all level, they are really paid well, when compared to the peers. And you should not compare, employees working in Infosys with Accenture and Capgemini, because their salary structure will be a little different. but their incentive plans are also.
What I'm trying to focus on,
different.
Mr. Bhushan, here is whether Mr. Sikka is trying to retain talent a little bit more right now. His focus is on, and that could push up wage costs. Would it be that Infosys is not really looking at margins immediately? Because some of the bigger companies are actually thinking of the new growth cycle rather than just this quarter.
Yes, I agree. Here, Dr. Sikka, would be very keen on building and retaining good talents. And yes, the cost is not going to be a key concern. And in that course, there is a possibility of margin getting impacted. But if you remember, under Mr. Narayan Murthy, they initiated, cost optimization plan, which resulted in margin improvement. I think a lot of those benefit has already flown in, but there are still some tail impact which will be captured over the next 2 to 3 quarters. So our sense is, yes, this wage hike or wage is not a primary concern, could have some impact on the margin, but that will be negated by some of the initiative taken by the management almost a year back.
7 to 9% dollar revenue growth. You think there'll be any change?
No, as I mentioned that I don't think there will be any change in the guidance in this quarter.
Okay, TCS, held a pre-quarterly meet. They put out some numbers. Is there any surprise expected there, or in a way, the street is pretty well prepared for what kind they'll report, what kind of numbers, and the focus, of course, is on volume growth.
Yes, their commentaries are very much what the street should expect. So they have guided quarter touch better than the previous quarter, and obviously there will be some contribution of Japanese subsidiary which they have taken over. So overall we are expecting 8% volume growth for the company and 7.3% quarter on quarter USD term revenue growth for the company, along with 100 plus basis point of margin expansion.
Okay, but that's later. Infi comes first Friday, 10th of October is when Infosys will report second quarter earnings. Shashi, thanks very much for coming on. We'll have you back once the numbers are up. Appreciate it very much. On it.
Dr. Bimal Jalan needs no introduction at all. He's joining us right now. Thank you so much for joining us, Dr. Jalan.